Are you a hotel manager who's struggling to understand what budgeting and forecasting is all about? Never mind, we've got you covered. One of the first things you need to understand about budgeting and forecasting is getting a good handle on your income statement, or the profit and loss statement as it is often called. So here is a profit and loss statement or an income statement, and I'm going to point out a couple of very important elements that you must understand before you even get into budgeting. So take a look at the annotation marked 1. This is the current month for which the budget is being compared with the actuals. You will notice in that current month there are three columns: an orange column for actual, which is the current month, this year actual. The next is the budget. This is the budget that you are setting yourself, a target if you want to call it that. And then the third column, a very important one, is a variance column. The variance column actually shows you the difference between actual and budgeted. So in a way, you are telling yourself, did you do better than the budget, or did you fall behind the budget? So that's your current month. That's number one. Number two is something slightly more complex, and it's called year to date. Year to date is the actual number of months completed in the current year. So take a look at the columns which are on year to date. So in this particular case, again, you will find that the year to date has those three same columns as the current month had, which is actual, budget, and variance. But there is a difference. Year to date takes into account the number of months included in that year to date calculation. So while current month is only dealing with 1 month, the current month, year to date might be more than a month. For example, if you are doing this income statement for the period, say, ending 31st March, then you would have year to date including January, February, and March, while current month would only show the month of March. Take a look at the last column on number 2. It shows an actual number, which is the number for the previous year. This is a very important comparison. So while all the other 6 columns are comparing with the budget, this particular amount and this particular column is telling you how you are doing compared to the previous year. All right, let's proceed further. Number 3 on the ultimate guide on hotel budgeting and forecasting is the actuals. The actuals that we talked about for a period based on the profit and loss statement. Now, actuals, as we saw earlier, have both a current month version as well as a year to date version, not to mention a previous year version. So, number 3 is all about actuals. Number 4 is the budget amount to which you compare yourself on every element of the income statement. For example, you would compare your revenue, your payroll and related costs, your other direct costs, and so on. So, number 4 is the budget. Number 5 is the variance between the actual and the budget. And this is an important column because whenever you set a budget, you would like to measure yourself against that, and the variance allows you to do that. You can calculate a variance both for the current month as well as a year to date. These two tell you whether your variance for the current month as well as the year to date are behind or ahead of budget. Now, on to number six. Number six is the total revenue budgeted for the hotel for the period. In the hospitality industry, there is a saying, if there is no top line, there is no bottom line. This shows you the total revenue right here. Number seven on this particular ultimate guide on hotel budgeting and forecasting is about the total expenses budgeted for the hotel under various categories, expense categories, that is. So, as you can see, number seven has both direct revenue producing departments with their expenses and undistributed operating expenses. Undistributed operating expenses are simply overheads, expenses which you cannot directly relate to any particular department. And that is why you see administration and general, sales and marketing, property operation and maintenance, utilities. These are expenses for the entire hotel and not just for any one particular department. Number eight, and last on the list, is the total profit budgeted for the month, the year to date, as well as the actuals compared to that budget. Profit is also known as net income. Overall, the elements 1 to 8 give you a very broad overview of where your hotel budgeting and forecasting is headed. In other words, what is it that you do in your hotel budgeting and forecasting? In a later video, we will zero in on individual elements, for example, revenue and what kind of revenue contribution is made by rooms department, food and beverage department, retail department, and so on. I will see you in the next video.